What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 8, April the 19th, 2023. We made some trades today, so let's get into it. Okay, so coming into today's session, my goal was the same as it's been all week, which is to only take trade setups that I know. Because if I do it like that, I have a much higher probability of being successful and profitable. So let's start our analysis at 9:30 this morning at the market open. So at 9:30 we had a huge sell-off from 34,090 through the 34,000 level all the way down to about 33,960. So that's pretty legit. That's a good downtrend to start the day. So from that spike we ended up creating a bear channel, which led us to trade number one. So for trade number one, I went short in the downtrend at the top of the channel, which was also a breakout retest, but I got a little bit greedy on this one. And I say I got a little bit greedy because when you look at my entry, the entry, fantastic. I went short at the top of a channel in a downtrend, which was also the breakout retest. You can't get any better than that. That's fantastic. But I completely fumbled the ball on the exit for the trade because I had two sell signals and I ignored both of them. So if I'm trading channels, one of my sell signals is to liquidate your position when it gets down to the bottom of the channel in a bear channel. All right, so that was my first signal. I ignored that. My second signal was when prices hit your scalp target, you take your profit. That was my second mistake. So I had two opportunities to get it right and I still did the wrong thing. So that's something I need to work on tonight and something I need to work on going forward in the future, because what's the point of taking good trades if you're not going to cash out and get the money? That's the whole purpose. So that leads us to trade number two, where I expected this zone that I created to hold up. That's just the natural principles of zones. But once I got into the trade, I quickly got out because I realized that there was a higher low that got established two candles before the one that I was trying to short on. And one of my biggest rules is that if you see a higher low, no matter how strongly you might feel about the downtrend continuing, once again, you just can't take it, because if you see a higher low, that's telling you that bulls are stronger than the sellers. So you have a higher probability of making money on the long side than you do the short side. So I would prefer to be on the side where my probabilities are higher, because what am I trying to do? I'm trying to make profits. So I cut that trade really quickly and I'm proud of that because I avoided an unnecessary loss. So that brings us to trade three, which is really a continuation on the idea from trade two, because once I got out, I realized that it was actually one of my favorite setups, which is a downtrend reversal that has a higher low get established that usually leads to an uptrend for the rest of the day. So once I saw that higher low established off of a strong reversal from a strong downtrend, I said, okay, I know exactly what I'm looking at and I know exactly what to do. So I put my order just below the bottom of the zone in expectations that it should push through a little bit. I got filled at trade three right here. And then look what happened again. Prices pushed up, they hit my scalp target, and I still didn't get out, which was another big mistake. Like we saw at trade three, it says I went long after the higher low was established. I should have taken profits, but I got greedy. So that's me being greedy two times in a row, which really threw me off for a good remainder of the session, because when I start off with two good trades, my confidence goes through the roof and I end up really, I guess, taking the best setups throughout the rest of the day because I don't feel any pressure. I already made my money for the day. Everything else after this is extra. So if I could have had those two good trades from the open, it would have really helped me out. So going forward in the future, I want to make sure that when I have a target that gets hit, take it. It's that simple. I can't even break it down more than that. It hits your target, you take it. That's it. So I went long on that trade on three, and it came all the way back to break even and stopped me out. So after I took that loss, I was a little bit on tilt, which means that you're not really thinking clearly when it comes to market decisions. So look at trades 4 through 6. On trade 4, I went short. On trade 5, on the very next candle, I went long. On trade 6, on the candle after that, I went short. So it's a lot of churning. unnecessary indecision. And one of my rules is that when I'm indecisive, I just shouldn't trade until I'm clear about what's going to happen going forward in the future. So another big mistake that just really threw me off a little bit. But luckily, I was able to get back right. And at trade 7, I went long in anticipation of the range being respected because prices came back up to the top of the range, shot back down to the bottom. So in my mind, I'm saying, well, if the range has been holding up so far, it should hold up again. And it did. But my only issue was when prices got to the top, I didn't take profit once again, and I ended up taking profits when prices pulled back to the middle of the zone just to have prices continue up to the top of this range right here that we established from trade 3. So even though I made a profit on 7, it was still subpar performance on my part, and that's something that I gotta work on. So from trade 7, we see prices go back up to test the top of this range again, and then look at what happens right here before trade 8. We get a higher low. So my thinking is, once you establish a zone, sometimes it's possible for you to have a zone below the zone and then another zone on top of the zone, which was the scenario that we saw today where we initially had this consolidation here. But if we look, if we were to draw a zone from here to here to here to here, it would sit right on top of the zone that we already have, and that zone got respected for at least the next 30 to 40 minutes. So that was legit right there. So when I saw the zone getting formed, I'm like, okay, we have a higher low. We have multiple higher lows before that. We had this one, which was a retest of this higher low that got made. Those are all bullish signs. So I'm saying, okay, I see what the market is trying to do. Let me just ride the wave. And I actually made a great trade right here at 8 and finally took profits where I was supposed to. Look at where I got out, right at the top of structure. I thought about holding it so I could take it back up to this level right here, but I was like, Ty, you cannot do that right now. You need profits in your pocket and you need to lock something in. So trade 8 was really good for me, and it got me back focused and got me back in tune with the market. So then we see prices push down back into the zone again to retest the higher low. Now, do you guys notice that pattern that's happening? Look at what happened down here. We had a reversal of the downtrend, a higher low that got established, and prices eventually pulled back to retest that higher low right here, right? Then look at what happened on the next sequence when a higher low got created. We established the initial higher low right here, and then we moved away from it and then came back to retest it. We respected it, and then we pushed up, made a new higher low right before trade 9. So on trade 9, I went long at the bull channel bottom. Like we see this trend line that's drawn right here. Throw another trend line right on top of it, and there you go. You have your bull channel. So when prices got back to the bottom of the channel, I went long. Now, my break even stop got hit, but in this scenario, I feel like I did everything that I possibly could. Because one of my biggest rules is when your break even stop gets hit, you respect it. You don't get back into the same trade immediately after, because my break even stop only gets triggered when my profits move by a certain amount. So when I'm up by a certain amount of points, I move my stop to break even to protect myself. Because the way I look at it, I say, if prices come all the way back to this level, then that means that there has to be a lot of momentum from the sellers, and I don't really want to be in it. So if I get stopped out, I just get stopped out. So on trade 9, it was something in me at that moment that said, Ty, it's going up. You need to get back in. But then the logical side of me said, if your rule is to respect your break even trade, then you respect it. So that's what I did right there. And even though prices continue moving up, I'm very proud of myself that I had the discipline to be able to not jump back in. Now, in scenarios like this, where it does work, you might walk away saying, well, next time I see it like that, I'll take my break even trade and disrespect that rule. It might work this time, but what about all of those other times where it's going to protect you? So that's a lesson that I learned today, and I'm glad I was able to follow my rules like I should. So we see prices continue up into the channel, and then they form more of a symmetrical triangle right here. So if you was to connect these lows from here to here to here, and then connect it with this trend line that we have below, we had a symmetrical triangle, which led to more of a consolidation than anything. So I just waited and waited, drew my consolidation zone, and that led me to trade number 10. Now on trade 10, this red candle right here, it didn't just form gradually over time. It was up here for the first few seconds of the candle, and then all of a sudden, boom, it just spiked all the way down to the downside, pushed through the zone, filled my entry, and I just froze up right there because it moved so quick. I didn't know what to think. I'm like, the bottom of the zone is the bottom of the zone. If I'm long right here, I should respect my entry. But then again, at the same time, we had so much momentum pushing down into the bottom that it's more likely that we see a little bit of follow through. And since I trade with tight stops, a little bit of follow through would be enough to get me stopped out, which is what happened on trade 10. So I went long at the bottom of the zone. So I was too early going long right there on trade 10. I came back, traded it again on trade 11, didn't work. Came back again on trade 12, took a small loss, not a big loss, but it didn't work still. And then I finally caught the long trade at trade 13 and made back all the losses that I took, which pretty much got me back to break even, which, hey, what's the point of that? You know, if I manage it better, I can come out of this scenario with a profit. It's just about being patient. So that's something I got to work on. When you have an idea, you don't necessarily have to take that trade immediately when you have the idea. You get the idea and then you wait for price action to confirm what you thought was about to happen. And once you get that confirmation, then you pull the trigger. So that's something I could definitely work on right there. So then let's move on to our next trade, trade number 14. I went long again at the bottom of the zone with the expectation of it holding up, because I'm thinking, well, if it held up over here, it should hold up over here at 14 again. But prices shot through really quick and actually created a lower high. So I started looking at it from this perspective. I said, what if this was the top of the market that got formed at 1040? Look at this right here. What is that? And what is this? This is a lower high in comparison to where the top was at. And then look at what we did. We pushed down and came back to retest the lower high. So we're seeing the exact opposite of what we were seeing earlier, where we had higher lows, we moved away, and then came back to retest the higher lows to continue the uptrend. Well, now we have a top, we have a lower high, and then we have a retest of that lower high. But I didn't realize all of this until after the fact. But I will say what I was able to recognize was that once I took that loss at 14, I'm like, okay, clearly that's the lower high. And then that's when I drew my bear channel right here, and I connected the top from here to the top from this wick, and I actually used that as a reference point to go short at trade number 16. And also I took another long trade at 15. Let's not skip over that. I went long at 14, didn't work. Took the exact same trade at 15, being a bonehead, and it didn't work. So let's look at 15 actually before we skip past that. Exact same trade, big mistake. The lesson is, accept your loss and don't revenge trade. I would say trade number 15 was probably the only trade of the day that I knew I shouldn't have taken. I knew it when I took it, but I said, I don't care. I'm going to get my money back. That's not the right idea to have. Revenge trading is a recipe for disaster. 10 times out of 10, 100 times out of 100. Do not do it. Learn from me. So took a loss on that one. So that's back-to-back losses on 14 and 15. But once I realized that the trend was down, I drew my channel. When prices got back up to the top of the channel at 16, I shorted. Now notice how this was a very similar setup at trade 16 to what we got at trade number 1, where we had a bear channel crossing over a consolidation zone. Now, once the zone gets broken out of, we get the retest, which is actually lining up with the channel. Same thing happened over here. The zone retest lines up with the top of the channel. So that's a great short setup for me. I took that short, and look at what I did. I took it back to the target that I should have took it to, which is the top of the zone from earlier that we established at around the open, right? I thought about holding the trade to the bottom of the zone, but I'm like, Ty, no, no, no. Remember the lessons we learned from earlier. Let's take our trades to our target, get out, and then look for the next setup. So 16 was really good. If we could have more trades like 16 and like 8 and like 13, we would do great. But the potential is there. We just got to clean up a little bit of these mistakes, and we should be better. So now let's move on to trade number 17, which was complete FOMO. I had fear of missing out because I shorted at the lows of the swing in expectation that the selling would continue. I need to short it from higher prices next time, which is one of my fundamental principles of trading. You short high and you buy low. You buy low and you sell high. Always, no matter what. So I lapsed on my discipline right there, and that's something I need to work on right there for sure. Shorting from higher prices. Never short from lower prices, because this is what happens. Prices move back up to higher prices, and then that's where the short trade takes off from. So, mistake on my part. And then I would say right here, this is when I just got all discombobulated from 17, 18, and 19. It just threw me off. Because after 17, I'm like, dang, I'm turning into the trader that I used to be. The bad trader that shorts at the lows and buys at the highs. Because look at what I did at 18. I went long at the top of the swing, which is long at higher prices, which it just, it's not that it can't work. It can, it's possible if the momentum is strong enough, but the probabilities are so skewed against you that it's not even worth taking because the reward is not equal to the risk. So the numbers speak for themselves. It just doesn't make sense to go long at higher prices. So that's my fault right there. But the lesson learned was to buy lower next time. One of my key principles, once again, buy low, sell high. So 18, that one hurt me because I knew I should have made that decision, but it was just something that said, do it, Ty. Do it. Do it. And I listened to that voice. But it's okay. We got work to do. So let's talk about our last trade of the day, trade number 19. So I went long, right? But this time, instead of going long up here at the top of the zone, I went long towards the bottom of this support level. Because notice how prices hadn't really been able to break these levels from this candle, this one, this, and that. So that's about an 8-minute span where that level held up. So I went long right there. And here I go again, once again being greedy. I was supposed to take it back up to the top of the zone. Because if we look, right, we can establish a range. We can box this up right here from here to here. That's our little small box. It's small, but it's profitable if we trade it the right way. So when prices got back up here, I should have exited, and I know I should have, but I said, well, if they made a higher low right here, I should be able to hold it back to the top. Well, that did end up happening. It did come back up to the top, but not exactly when I expected it to. So my best course of action would have been to take the profit right here, and then when it pulled back and it made a higher low at this area, then you get in again, and you either can take it to the top of the, well, to the zone bottom right here, or back up to the ultimate top of the zone. Or if you want to be really, like, really out there, you can take it all the way back up to the high for the day, which ultimately, after all of this happened, it did end up getting hit. So today, man, I just feel like I showed signs of promise, but I also showed signs of inconsistency. Because you look at my good trades, and my good trades are really, really good. But then you look at my bad trades, and they're really, really bad. So it's like, which one are you? Are you a really good trader or a really bad trader? I'm trying to strive to be a really good trader. So I need to focus on being 100% disciplined. Not 99%, not 98, not 97, 100% disciplined time after time, trade after trade, session after session. So I know tonight I need to work on, for one, getting out at my profit target. You see the move, you call it. You have a great entry, that's good, but it's not the end of it all. Once you have a good entry, now you have to manage it the right way. Once you manage it the right way, then you take a good exit, and then your trade is complete. So my goal is to focus on completing the process. Don't get happy because you got a good entry and it's moving for you and you making profit. No, 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 no. Let's stay level headed and manage it the right way to get all three phases of the trade correct. Entry, management, exit. All of them need to be on point. So that's one thing I need to work on. I also need to go back and review my notes and just look at the line that says buy low and sell high. And then I need to look at that line again and then look at it one more time. And then maybe go back to what they used to do when you was in elementary school. They make you write something out 50 times. I will buy long and I will buy low. I will not buy at the highest price. I will not short at the lowest price. Whatever I need to do, I need to do it because I need to drill those rules into my head because I usually follow them, but sometimes I slip up and it's not a good thing. But I would say that I'm not I'm not dejected after this type of losing day. I'm actually very optimistic because I know exactly where I went wrong. I know exactly what I did right, and I know exactly how to do more of what I do right and less of what I do wrong. It's just a matter of me doing it. Like the information is there, the knowledge is there. Now it's about application and execution. So that's what I'm focusing on for tomorrow. Application, execution. We got the knowledge, now we got to apply it. So I appreciate you guys for tuning in with me today. I feel like I learned a lot and I hope you guys did too. Tomorrow is day number 9. So I'll see you at 9:30 sharp and we'll run it back. But until then, take it easy.